And hope everybody's having a great MLK day. And I'm living the dream every day. And I live the dream. It's hard to believe, isn't it, that we live in a country where you used to have to go to different bathrooms, use different water fountains. I mean, you look at it now and you go, well, that's just horrible. But the great thing about our country is that we learn from our mistakes. Well, sometimes we learn from our mistakes. That we treated a certain segment of the population as inhuman and as being significantly different, from everybody else. It's a sad tragedy, but it's also a victory in that we don't do that today. Now, there's always going to be racists among us. Racists. There are white racists. There's black racists. There's whatever racist. There's racists all over the place who don't like other races, but the experiment works quite well in my house. My house is great. I got little kids and they all fight. It doesn't matter what color they are. I got the whites fighting the blacks and the blacks fighting the Hispanics, all in my little household. And it's just really great to see, I don't know, the fighting, but the love that my kids have for each other, regardless of skin color. So, it can happen. And I'm grateful that it does each and every day in our home. So I hope you're having a wonderful, wonderful day. Now, keep in mind that stock people are off today, right? They're off because, well, stocks don't trade on holidays. But most holidays, we future traders trade because futures are, MLK Day is an American thing, right? And that's what we celebrate here. It's not celebrated across the world. And therefore, the futures markets are open. Oh, I also wanted to say this too. If any of you guys want to join in on the live class at Alabama, you're welcome to. We'll use the same link that we post in Discord for the Alabama class as well. So, if you wanted to do that. So, like, for example, tomorrow, my class is going to meet on Tuesdays and Thursdays at 1:30 Eastern time, 1:30 Eastern. So we'll go about an hour. And so I'll be taking those kids, well, some of them older than me, but we'll be taking them through, hey, what is a stock? We'll start that tomorrow. And we may even talk about some puts and calls and, instead of buying stocks, selling puts. I think that's going to be a great thing. I think a lot of people don't know, oh, wow, if you wanted to buy a stock or an ETF, why not sell a put instead of just buying it, right? So that you can do it at a much better price. And if your strike is never breached, then you get to keep the income. So I got a feeling that that's going to be eye-opening for a lot of people as we start that tomorrow. Who knows? Maybe they already know about that. We'll see. They're probably all in these Wall Street bets. They're buying options every day. They're probably much more sophisticated than I think they are. But tomorrow we'll talk about what is a stock. So that should be interesting. All right, let's look at the futures. Flat. Look at that. Flat. The E-minis are flat. It's like, since a lot of the American traders are off today, we don't expect a lot of movement at all. So it's down 0.01%. Where's the AD line? We don't have an AD line. Well, that's because we don't have stocks trading. So we don't have advancers and decliners today. So there's no AD line. So nobody flip out because you don't have an AD line. So no AD line. Let's see what else we got. The NASDAQ down 0.18%, down 28 points. So not moving much of anything. And volume is really, really weak. Look at there. The latest volume, what's that? 151 is the average. Look at there. 152 contracts on the NASDAQ. So nobody's trading. So that's down just a little bit. But we trade. That's kind of a cool thing because we're futures traders. So let's look at our volume profile on Big Green Monster. So I'll be dang. Here's the E-minis. Look where support was. Isn't that crazy? Man, it's just amazing how that works. How does it work? How does it know? And how does it know to stop there? It's just spectacular. And I wish I could explain it. And can you imagine when I teach the Big Green Monster to my Alabama students, they're going to be like, what kind of voodoo crap is that? And I'll be like, I really don't know. We don't know why it works. I'm not that sophisticated, but it's just an amazing little thing. How often it catches these little, things. And you say, well, Bobby, you must have drew on this yesterday, right? Or today. How about back on the 2nd of January is when we drew this, or it might have been the 3rd. and how this thing just continually works is really significant. So where do we anticipate our price to go? Well, we anticipate that since we are now oversold, that it would go back at least to the point of control on volume profile. This is where the most volume has traded over the last 10 days, right? At that level there. And specifically since we're oversold. So that's kind of bullish. Where would we also expect it to go? Well, we would expect price maybe to even touch the 50% line there. And then if you're even further out a few days, we wouldn't be surprised to see a touch back just above 4,800. So this is kind of a bullish case scenario for the coming days. Now, as always, we hedge our bets, right? What if it doesn't go up? Well, y'all, if the market doesn't go up, it goes down. So this is just our opinion. Our opinion is we're kind of slightly bullish. We would say we are neutral to bullish for the next few days. And if it doesn't go up, it goes down. Just 1 second. There. All right. Let's clean that out. So let's see what our little NASDAQ-y's doing today. How's our NASDAQ look like with no volume? Let's see. Recent NASDAQ. I said recent NASDAQ. All right, so you see there was a lot of fluctuation between it deciding whether it wanted to be fair value or oversold. And so then it said, hey, I need to get back into the fair value zone. And look, we're right at the point of control. So what would we say here? We would say we're neutral to slightly bullish, right? Because we would expect it probably test some of these gaps in volume. Not at all surprising to see that as it heads back up to that 50% line. So we're neutral to bullish. We're not as bullish on the NASDAQ as we are on the E-mini, the S&P 500. All right, now, then you would say, what's the next thing that we do? Well, the next thing we do is we look at the skew driver, but we're not going to look at the skew driver today, and everybody needs to know why. There is no skew driver on a day when the SPX doesn't trade, because our skew driver, where we try to find out the skew in the options, doesn't really happen on days where the SPX is not trading. So we can't determine what the skew is in the SPX options because SPX options aren't trading. All right, cool. Now, with that being said, what do? Well, it's not a lot to do, but we know what we can do. First of all, let's look at our, I don't want to look at our hedges as much. I just want to follow procedures. But let's look at the forest before we look at the trees. So you see here that our TQQ position is only 110, and we've got an ITM. Remember, Goofy Bobby sold some calls on, when did I sell them? I sold them on Friday. And why did I do that? It's a good question. Now, I really don't know, other than I was thinking that, you know, there's a chance that our NASDAQ, remember I told you I'm not as bullish on NASDAQ, and I said, well, there's a chance it'll go down. So I got me a lot of theta and I chopped my delta down. So it was just a, I don't know, just kind of a gut feel that the NASDAQ might be a little weak in the coming week. It's been weak, and that cut my deltas down a lot. So right now that position's down $164. We don't know if it has P&L today. Should have a little profit and loss because, but TQs aren't trading today. So everybody needs to realize what's happening there. So when we did that, we really got a theta bump big time because of this, right? We got a theta bump because of selling the covered call, and we got there's a bunch of theta, and we got very manageable negative vega. So we're up $87 on the day, really just kind of a nothing type of day. So there is the forest. Let's look at the forest in the other account. Now, remember on this account, I did not sell the covered calls. You know, I thought, hey, let's just check if we did it in one and don't do it in another one. So we don't have near as much theta. Our vega is not as much negative, and our deltas are a little significantly more higher because we don't have the covered call. All right. So I will show you this, even though it's not trading today. We'll show you the TQQQ and why we thought, where we think we should sell a covered call. So remember, we've kind of got a plan. If we're in the upper quadrant right here, if we're in the upper quadrant, yeah, and we've got relative strength above 70. It's probably a good place to sell a covered call. We're at upper quadrant. We're above 70 in the relative strength. Good place to sell a covered call because we anticipate it to go down in that thing. Now, here's the goofy part. I sold one down here. Sold a covered call on the TQQs there. That kind of looks like a dopey decision, especially because we got a 200-day support below it. And I sold a call here when it looks like the market should be trending back to the upside. Of course, and the relative strength is very low. So why did I do that? Probably because I'm a dorkhead. Probably because I'm an idiot. Right? But I offset some of that because I used part of my premiums and I bought 10 more shares of TQQQ. And that's, if nothing else, shows you the power of options. You can use them in so many ways. So I did something that was bearish by selling the call, right? You sell calls, that's a bearish move on otherwise holding shares. But then I use proceeds from that premium sale to buy 10 shares of TQs. Isn't that cool? I mean, there's so many things you could do. And of course, my friend asked me, he's like, why'd you do that, Bobby? That's kind of dopey that you did that. Matt coming in. Matt's got the snow. He's out there doing things with Caroline in the snow. So that's got to be fun over in Kentucky. All right, so we're just realizing what we can do with the power of options. Now, you're probably noticing this weird thing at the bottom. You're saying, Bobby, what the crap is this? All right, you know, some guy wrote a little ebook, and he's got a little indicator that he came up with, and I decided that I would buy it. It's 29 bucks, and he's got this little indicator. So what he does, and I'm not going to do this at all, but I just want to see how it works. So when you see a red arrow, he sells all of his TQQs. Now that would have been a bad signal there. That signal didn't work, right? He gets totally out of the TQQs after a red signal. So he would not have been back in with this red signal. And then on a green signal, on the very next day, he gets back into TQQ. Isn't that cool? So red signal, go to cash. Green signals, go back into TQQs. So here he would have put 25% of his portfolio into TQQs. Then he got another green arrow, green signal. So on the following business day, he would have bought another shares, 25% of his portfolio of TQQQs. Now, if he gets a red arrow tomorrow, then he'll wait till the following day to sell all his TQQs. And he's been pretty successful with it, but I thought it was interesting. And I said, yeah, I'm gonna give him $29. I just want to see how his little indicator works here. So that's what this is. And if y'all want to know where that is, then I'll direct you to his little site where you can, if you wanted to buy his little indicator. I'm just going to see how it works, because I'd like to know, how does this work in conjunction with us doing the covered call, right? So let's see, we would have sold a covered call here, right? We would have sold a covered call here. Well, interestingly enough, his little signal gave a sale here, right? So that was kind of close. So if I'd have kind of looked at that, I could have said, yeah, that'd be a great place to sell the covered call. So let's see how it did over here where we would have done it another time. Right here. Right, here's where we said, well, we could have sold a covered call here. Well, sure enough, he gave us a signal right there, gave us a little bearish signal that would have been a good time to sell it. Here was our third indicator of selling a call, right? We're above the RSI 70, we're in the top thing, and check it out. His little thing gave us a nice little red sign there. Now here's some other red signs that would have not met our criteria, right? Because the relative strength wasn't there. But look, his little signal was correct, and that would have been a great covered call. So I don't know, it's just something to play with. It's not that I'm adding anything to the strategy. I'm not doing anything, but I'm always, you know, that I am a scientist at heart. I'm a lover. I'm a scientist, and I love looking at other people's stuff that they come up with. And so he's come up with this code. Let's see, I could show you his code, I guess. Show you his code. Let's see, how do I show you his code? Oh, here we go. Here you go, Bob. Look at this. He came up with this code. So anybody that spends that much time on something, heck, I'll pay them $29 to figure that out. All right. How do I close that? Hey, close that, Bob. Oh, Bob, old pal. There. All right, so kind of cool, right? So no QQQ trading today. and we're just doing our own little thing. So we're up $86 on the day, not much thing. So what are we going to do today? Everybody knows what we're going to do. We're going to do the best trade that we've got on the board, and that is our 111 trade. Why do we do the 111 trade? Well, here's why we do it. Look at the beautiful hedge that the 111 gives us. Beautiful hedge. So here we are in the E-minis or in the micros, which is 1/10 the size of the mini. So this is the micro. So the market's down just a bit today. And if the market continues to go down, you and I are going to be quite happy with our micro position because we've got this hedge built in. How do you get this hedge? Well, you put on all these ungodly options positions where we have put debit spreads up here, and we've got naked puts components down at the bottom. So then we panic here because if you go all the way down to 4,025, you start losing money, right? But we've got other hedges in place that pop that up to the downside. So let's do our little trade for the day. How do you do it, Bob? Well, I go close to 60 days without going over. Okay, so we'll go to 60 days out. Yeah. And we do a long put vertical. So this will be our first one in this expiration. All of our other ones are done. We have finished those months and we'll just let those hopefully expire. So I do these 50 points wide. Right, 50 points wide. Now you see the debit that would cost me, it would cost me $16.25. Well, that's not where we want to do it. You could do it there, but we like putting it out to give us a little bit of buffer to the downside, right? I mean, we don't want our hedge working right here. We want it to work down some. So what we do is we move this down to a point to where this put debit spread would cost us $10. So y'all be quiet, okay? Daddy's in a session. So we're going to move that down. And I normally go to 975 because we have found that we have to bump it up a quarter to get filled. Let's go down. Hey, guys. You don't need to get the old Beltaruni out. And I'm sorry if any of y'all are don't whoop your kids and you are in the wrong place. Oh, I don't whoop them off them, but when I do, it normally works. So there's 975. So I'm going to pop that up a quarter. So we'll pay $10 to get filled. And do we have enough buying power to do it? Boy, we don't have a lot of buying power, so this will be interesting. Now, this will increase our buying power because this is a put by debit spread. So let's watch this. So that it increases our buying power by 48.58, and this trade cost us $53.92. So let's go send our order in and get filled. I said send the order in and get. And of course, there's no liquidity today because of the holiday. But let's see if we can get her filled. Somebody's out there. Somebody will take our order, replace our order. Let's bump it up to 10.25. And I won't go over that. If we don't get filled because of lack of liquidity, then we'll let it go. You are out. Well, dang. All right. So, do I really want to pop it up anymore? No, not really. All right. So then what do? The next component is to sell something that's about $20. So we could sell this one. Now, until that fills, I probably can't do this. Let's see. This one would cost me how much buying power here? $544 in buying power. I got $570.95, so it may let me go. Let's see, reduced by 546. I got $570.95, so probably let me do it. There we go. So we got filled on that. And I guess I'm still working on something, right? Yeah. Oh man, Bob, do you want to go at 1050 to bring them out of their retirement? I'm so sorry that you're at the Hamptons and I'm having to, pay you additional. Hey, Beth, don't fuss. I'm in the class. Thanks for getting them out, though. Let's see if we'll get filled here. I'm not going over 1050, y'all. Just not. Okay, so the liquidity is certainly hurting us here. Let me just cancel that altogether. See if I can. I may have to move a strike up a little bit. Let's see. Let's cancel that order. Let's try it. Let's try it again, old Bob. Long put vertical. Okay. Let's go down. Find somebody that might take the bait. I guess I could start looking at the liquidity and open interest on each individual strike, but I don't want. I'm on vacation today. Actually, I'm on vacation today. But this one is going to be fine. Come on, let's see. It's a 1050. Let's see, 1075. See if anybody will take that one. Jack Squad crap. I'm telling y'all, Hamptons people, I'm not going to be playing with y'all today. All right. I got stuff to do. Y'all think we're unsophisticated here in the South? Well, crap on y'all. Can't believe I'm bumping it up. Y'all never seen me bump one up this much, right? 1125. I'm gonna do it one more time. I can't believe I paid $11.50 for that. Says the now. So 12. Now we're in. Now we're in. Now, I'm sorry I got you off your yacht, you flipping idiot, to buy my little thing that should have been $10 for like $11.50. You moron. The individual views expressed by Bobby are those of the host. Hey, baby. Hey, sweetheart. All right, let Daddy in his little class. Okay. So over here, we're going to do the same trade. And we'll do it in the micros as well. We need to find out how to do those in the micro. What is it? The micro NASDAQ. That would be fun, right? We found out how to do that. So we're going to go 60 days. And where were the strikes? Can't believe I'm paying this. 4,500, 4,450. And then I want to just talk for a minute. We'll just have a little chat. We'll have a strategy chat. And I'll run a couple things by y'all. 4,500, 4,450, 4,500, 4,450. 4,500. So I'm going to buy that one. Gotta hold your little control key down. And 4,450, 50 points, right? Control, hit the sale. No. All right, then we're going to do something for about what, $20, $21. So we maybe go closer because we're going to have to bump it up some. So let's go to $22 to do that. Now, so let's see if we can get filled for $11.50. Remember, you got to do the micros in 25-cent increments. So we'll be getting a credit of $53 if we get filled there. And I would imagine it's going to be harder to fill 3. I probably should put the orders in separate, right? Because it's going to be harder to fill 3 legs than it would be 2 legs and 1 separate. Uh-oh, what happened? I cancel it. I need to cancel it. And let's go create duplicate order. So let's see if we can do, let's go down to $11. It still gives us a nice little credit of $50.59. There we go. So we're filled. All right, let's go put it in a group. Hey guys, Daddy's in the class. Can y'all be quiet just for a second? Poor Daddy has to start yelling and screaming and letting the white trash come out of me because y'all know what's in there. All right, so here we go. Yeah, I grew up in a trailer park. I can't help it. Part of me is still there. Every now and then we go drive by the trailer park and I show the kids. I said, that's where Daddy grew up until the house burnt down after my mama was cooking salmon patties and we went over to the neighbor's house, see how they do it. And we came back and the whole little trailer was on fire. Quite an emotional day for me. I still remember it. Okay, so let's go. Oh man, we got all kinds of stuff. So let's go. Got something there. Yeah, I got 3 there that I got to put somewhere. Huh. Interesting. Let's just do file these. Oh man, I got them all over the place. So let's do this one first, and we'll call this 111. Hey guys, y'all about to see it come out. I'm gonna whoop some R's. See y'all. Hey, y'all be quiet, okay? You heard what I said. Leave Daddy's thing alone. Quit, baby. Hey, go play. Go play. Go play with the microwave, okay?
What microwave?
Out in the kitchen. You know how y'all like to play with the microwave. So I think this is 111 60 seconds. Does that sound right? 60 seconds. And we'll put this one in 111 63rd. All these little trays. Not a single one has lost money yet, which is cool. 1 63rd. All right, so we got all those in there. All right, now let's just talk for a minute because let me put my TQQs in a covered call too. So I'll do right click. We've got unallocated 4. I thought I had that in a, I thought that was in its thing. So let's put that in a covered call. Move to group, add group, TQQQ covered call, TQQQ covered calls. I want the stock to be separate from that. So let's see. So my stock, I should have a group, move to group, call TQQQ Empire, right? There we go. Oh, I know what that is. That's because I guess when it's split, they didn't put our shares in there. So now let's go to TQQQ Empire, which is we got 444 shares. That's right. And y'all haven't seen me open up the AIM spreadsheet today either. Why? Because the TQs aren't running, the TMF isn't trading. So there's really nothing to do there. Guys, I swear, go get the bell. Well, y'all be quiet. Emma, cut your game down, baby, now. Before Daddy comes up, cut your game down. Daddy's in a session. Unbelievable. I mean, these kids have no respect.
I'm still turn down.
Well, take it to another room. I would stand up, but I've got my underwear on. Let's see, here we go. All right, now let's just have a chat for a minute. All right, here's our chat. Open up our whiteboard. Watch you can do this. Oh, y'all watch this too. I wanted to do this. I've got a switch scene button. Watch this. See if it works. Work it on. Oh, here we go. What's this? I can switch cameras. I said I could switch cameras. Let me see. Try again. Put combing Daddy's hair. All right, so let's try this. All right, guys. So let's talk about all the different things that we could do as far as hedging and doing things. So especially with selling the covered calls, right? It just gives you a lot of flexibility. Sell covered calls. Start thinking about all kinds of stuff that you can do. Because some of y'all, my friend who has been trading TQQ, he got scared over the weekend. He says, I can't believe you're doing what you're doing. He says, you're nuts, man. You can't hold TQQ, because he started Googling it, right? And everybody and their mama says, you can't do this. And Lily, can't hold TQQ. It's too dangerous. Well, let's think about all the things that you could do. First of all, on a 1-1-1 trade, right? Our 1-1-1, we're bringing in about $50 credit on the whole trade, right? $50 credit. So what could you do with that $50? Well, with that $50, you could buy puts in TQQQ. Could you not? You could use that money to buy puts in TQQQ if you're scared, because that's, I mean, if you said I want to use that totally as a hedge, and instead of using it as an income trade where we keep that $50, you could say, okay, I'm going to invest my $50 credit that you just got on from putting that 1-1-1, and you could actually buy a $50 put in TQQQ. That's kind of interesting, isn't it? So, there's always stuff that you can do with options. That's a great part about options. There's always stuff that you can do. All right, let's think about other stuff you could do. So you sold the covered call in TQQQ, and we brought in on those 4, what was it? What's $1,000, right? So you're bringing in $1,000 a week, right? So what could you now do on that? Well, on your $1,000 that you brought in, and we did this on a 7 days to expiration trade, okay? So what if you did this? What if you took that entire $1,000 that you brought in on credit on selling those covered calls to buy $1,000, okay, $1,000 of TQQQ puts. But instead of buying 7-day puts, what about if you bought, I don't know, 30 or 45-day puts in TQQQ? So then you're saying, oh, wait, I see what you're saying. You sell your calls for 7 days, collect that $1,000 income, and then you buy puts out to protect you or to give you a hedge on your TQQ shares, right, that you're holding long by buying puts. Now, for those of you who are new and maybe don't understand what that relationship is, if you buy a put, that gives you downside protection, right? And that's what a lot of people does. That gives you protection to the downside. So you could use that to buy $1,000 worth of 30 to 45 day puts. Then what would you do? Well, after my 7-day calls expire, then I could sell another 7 DTE calls, right, to collect additional income. So this time I've got these things expiring in 7 extra days. So now we're down 14 days. So we still got what, 16 days on these puts. Everybody with me? So then what do you, so you've still got puts that are kind of protecting you. The selling of the puts is that, so what if TQQ goes up and blows past your strikes on the 7-day calls that you sold? Well, all you got to do is roll them out in time, right? Roll them out in time. And you still got these, roll them out 7 extra days to collect the credit. You still got these puts, long puts that you've got protecting you to the downside. So you could actually go for a month, you could sell calls, take your first month's premium and use that to buy puts, and then sell for another 3 consecutive weeks and still have those in place. So then after you've done this a month, what would you do? Well, then you start it all over. You'd sell your calls, collect your $1,000, and then now that your puts have expired, you would buy TQQ puts out 30 or 45 days. And just keep on rinsing and repeating. So I think the takeaway, and I'm not trying to overly complicate what we're doing, but I think it's interesting that you could say, whenever we buy options, we want to do something that allows us to you buy options, you want to sell something against that to, in other words, I don't have the money to buy all of these puts that I want to be buying. So you've got to sell something. You don't have to, but I like selling something against it. So it gives you a really, really strong thing. Hey, I'm going to buy $1,000 worth of puts from the $1,000 premium I got from selling calls. How cool is that? And I'm going to give those a longer expiration so that those will give me protection for 30 to 45 days. And then for the next 3 weeks, I'm going to continue to sell calls. Hold on a second. I'm going to beat the hell out of y'all. Down, nail. Down, nail. Sorry about that. Sometimes you got to get serious with them. All right. So there you go. So just keep in mind that there's always something that we can do. You can sell something to buy something, sell something to buy something. Like I'm about to sell my kids little iPad games if they don't turn down when daddy's in class, so that I can buy some headphones where I won't have to listen to that garbage all day, right? So you don't got questions on that? Isn't it great though that options give you options? And that's the thing that I think everybody ought to leave here today. Options. Now they're in there telling mama that I'm being mean to her. Options give us options. Options give us options. So you want to buy options? Okay. How do we finance that? So we're going to buy something. Let's sell something to finance it. And that's exactly what we do with the 1-1-1 trade. On the 1-1-1 trade, we buy a put debit spread. Put debit spread. And we do that for $10. And then we go out and say, well, if we're going to do that, let's sell something to get twice as much credit to pay for it. So then we, sell something for $20 to finance that. All right. So in the case of using the covered calls to buy puts, what are we doing? Okay. So we're buying puts on TQQQ, right, that are 30 to 45 days out for $1,000. Okay, how are you going to finance that? Well, for the next 4 weeks, we're going to sell 4 covered calls each week for $1,000. So how much credit are we taking in? We're taking in, over doing that 4 weeks, we're taking in $4,000. to buy $1,000 worth of puts. Isn't that cool? Or you could kind of do it like our 111. You could say, well, why don't we do it this way? Why don't we sell $4,000 worth of calls in order to buy $2,000 worth of puts? I kind of like that, the double thing, right? So you could buy $2,000 worth of puts and finance that with the sale of $4,000 worth of calls. Now, is that an ideal thing to do? I'm not exactly sure, because when we start doing this, you're doing very bearish things on TQQQ. Now, why are we holding TQQQ to begin with? Because you and I have looked at the companies comprising the NASDAQ, and we've said we like those companies for the long term. So there's really no need to have to do all this stuff, because all you're doing is you're reducing your TQQQ delta. And why hold TQQQ to begin with? So you got to keep that in mind too. So maybe instead of selling, if you've got 400 shares of TQQQ, maybe you don't sell 4 calls. Maybe you sell 2 calls. And maybe you don't buy 4 puts. Maybe you buy 2 puts. Just as a little bit of a hedge. Because I think it's easy to say, well, we're doing this, it's risky. We could be over hedging. We don't want to over hedge, because we still want our TQQQs to do well over the long term. And by using AIM, we've got a program that allows us to buy the dips. So when this thing goes down significantly, we've got an algorithm saying, scoop it up, baby, scoop it up. So, yeah, you just keep it in mind. But I think what I want you to do is I want you to go, oh my gosh, with options, you have so many options. Just don't overcomplicate it. Don't overcomplicate it. But, will I sell covered calls ever again? I don't know. I just had a hunch about this week. I was thinking, I think it might be down. Even though it didn't show it on the relative strength, it didn't show it on our little chart that we normally do. It was just something that I don't know. I just kind of a gut check said, hey, let me sell 4 calls this week. And did I do anything with the $1,000? Yes, I did. What did I do this time? Is I bought 10 extra shares, right? I bought 10 shares of TQQQ. But I'll leave you with this. We can do anything. That's a great thing. When you've got shares and you've got options, you can do anything. I mean, there's all kinds of things that you can do. Buy puts, sell calls, especially if there's a week where you go, oh, I'm a little nervous. I'm a little nervous, Bob. Well, that's why, you kind of start looking at things like this and go, well, yeah, here's where you could get nervous. You're kind of at the top of a linear regression channel. The relative strength has been really strong, and it may be this is showing us that TQQQ is overbought. Isn't that what you use relative strength for? Yeah. And then you go, well, some other guys have done some research, and look, they're saying it's overbought too. And you kind of need to get out of it. So you got 3 things aligning here that says, hey, you might want to get bearish for just a little bit. Spoon, spoon. And look how that worked out. Wasn't that great? Now, as I look at this, I always tell you about the biases that I'm violating, right? Or am I violating my confirmation bias that, just because all this lines up, I go, this is the way it's always going to be. Yeah, maybe, do I have all these biases? But look here, this was kind of cool, even though, it was kind of in the upper quadrant, check 1. This is the little stochastics here. It's kind of showing, hey, you may need to get a little bearish here. Okay. Your relative strength didn't chime in and say it was overextended, but it was in the upper half. So you got to kind of figure these things out when you go, well, now's a good time that I could convert my shares to income. What do you want to do with that income? And you can use these as short-term signals to get back in. So right here, I probably should have thought more than anything, even though it's probably bullish. Why would I? There's no really good reason for me to sell the covered calls that I did here. There's nothing on here, or here that suggests I should have done it. And I did it more than anything as just a gut, just kind of a gut check. Is that wise? Probably not. And my short calls will probably just get blown past as we go through the week. We'll see. You know, I didn't do it in the other account, but it is interesting to see when you go over here and go, well, what's NASDAQ doing today? NASDAQ's down. So right now I look like a genius. All right, it's down 0.25. What's it going to be by Friday when those options expire? I don't know. So I probably shouldn't have sold 4 covered calls. Maybe I should have sold 1 or maybe 2. All right, who's got questions? Oh, y'all got some chat going on. What are y'all talking about? How many puts would you buy to totally hedge or partially hedge? Yeah, Stacy, what I would do, and we probably need to look at it over here somewhat. We hadn't really done this yet. So let's look at what our TQQ looks like. See if we can make heads or tails of this. See what TQQ looks like. TQQQ. So there's our shares, right? There's 1 expiration. Let's see what we can do here. Expirations, 4 expirations. Let's see, single symbol. Let's see what all this is showing. Let's see what all we got here. So it's got our 4 options here. It's got our 444 shares there. So let's see what our options look like. Yeah, so there's just our options and what they look like. So, you know, it's showing if you go up, you're going to lose money. And I probably need to play with this because right now we would just be doing workshop stuff. So single symbol, and let's add our stock to it. Yeah, so it looks, so I mean, because basically this is a long stock line. Well, why is it a long stock line? Well, because we have 444 shares, right? So that's why you're not really seeing, you know, effects of that call so much. I mean, here it goes, right? Let's see where my price slices are. Up 10, down 20. Let's go up to 10. See what we look like there. So 71.98 is where we're at right now. So as you can see, what we've done by selling those calls is we've reduced the amount of money that we make to the upside. So let's see what that makes. But still, if you go up 10%, am I missing something? I'm up $1,062.89. That's kind of cool. Let's see, that's on 122. Today's the 17th. Let's get everything looking right. Today's the 17th, 1,062. You're up that on the open. So we're limiting ourselves. So what's this? What happens when you take off the calls? What's this? Then it's going to go like this, right? It's going to look like this. Boom. Let's take the calls off. Boom. See it? So now you've got a stock diagram, which is basically 50% up, 50% down. So you put that call on there, and then you've got that. So why don't we just, if y'all don't mind, y'all want to play with it a little bit, Stacey? Let's just look at this since we're just kind of killing time today. Let's see what we could do. Let's go to TQQQ. Surely it'll let me simulate some stuff here. So let's go to TQQQ. And why don't we go and say, so we brought in $1,000 the other day. So what if we did look at something that was, 32, 45 days and see what we could do? All right, so let's go, let's see, that's a weekly at 46 days, 60, 60. Let's go to this 32. It's probably got more strikes, yeah, than the weeklies. Watch, the weeklies don't have as many strikes, do they? I don't think they do. Maybe they do. Let's go out 32 days and let's buy us a hedge. So we brought in $1,000. All right, let's see what we could do here. So $1,000, we could buy several contracts way down here. Let's see, probability of being in the money. If you went to about a 10 delta, you went to 52, 55. Here you could buy 5 contracts of that one, right, at $2. So we got to kind of figure this out where we want to be. So let's look. If we're at 71.87, where would you want to hedge yourself? At a 10% down? At a 20% down? Let's look at that. 71.87. So if you're at 71.87, and again, I'm thinking out loud here. I've not thought about this. We're just kind of doing this. So let's say we want to brace for a 20% down move here, which would be a 7% down move in the NASDAQ. So let's say a 21% down or 30%. Let's say if the NASDAQ goes down 10%, then we would go down 30% here. So let's do that. So let's go down 30%. So to go down 30%, that'd be if we went down to 0.7, would be $50. Okay, so let's put our hedge at $50. That'd be a 30% down move. $50 is right here, right? So $96. Cost me $96 for one contract. So I could actually do 10 of these things, right? And we're going out 30 days. And remember, we're gonna sell puts or sell calls against this to finance it. So let's do, why don't we do this? Let's analyze this trade. All right, so now we're going to hide positions and let's just see that. This is so fun, y'all. This is the fun thing about options. And I appreciate y'all just letting us wing it here. This is not something that I was prepared to talk about today. We're just thinking out loud. All right, so if we paid, how much would this cost us? Let's do confirm and send. That would cost us $965. So that would cost us the entire amount that we got from selling the calls, okay? But if we're kind of bearish for this next upcoming month, that would be great. All right, so let's see what this looks like. And it gives us 30 days of protection, whereas we've got 7 days of selling those calls. So now let's go single symbol. Let's go to show all. Now then, look what we got created here. Now what do we got here, Bob? All right, let's look at all of our ups and downs and all this kind of stuff. So we're holding 444 shares. We've got 4 covered calls sold, right? We've got 4 calls sold and we've got 10 puts. Well, what does this look like? All right, so this looks like, and I don't want that to be 117.22. So let's go back. Well, yeah, that's today, and that's 117.22. So let's look at our price slices. And this kind of kills me. Would y'all mind if I make all my price slices like I want them? 4, 5, 6, 7. All right, so this is my price slice here. This one I want to be up 5%. This is just where I like my price slices, 3, 4, 5. This one, let's make to a percent, and let's make that up 10%. Let's make this one up 5%, and let's make this one up 15%. Then I kind of like doing -5, 12, and 20, just where I like them. 5, 12, 10, 11, 12, and let's do this one, -20. And then we may move it to -30 just to look at it. Okay. Now let's look at it and see if we can figure it out. So if we go up, we still make money. 368, 5%. If we go up 10%, we still make money. If we go up 15%, then we still make $1,700. And we know that our TQQ shares are definitely able to go up 15% in no time, right? So you still got upside here. Still got upside, even though we've got 10 puts and 4 calls. So let's just kind of look at our little thingy majig here, right? So here's our little risk graph. And you're seeing money to the upside, money to the upside, money to the upside. Looking really, really, really good. So as of February 19th, it'd still be up. Let's see, is that profit and loss on the open? Let's do profit and loss on the day. Here we go. There you go. And so you're still going up. See it at 219.22. If price goes up 15%, then at on the 17th, we'd be up 695 today. On 26th, 642. On the 19th, you'd be up 410. Isn't that cool? So what happens to the downside then? So what we've done is provided a buffer to the downside. So you're down 5%. Okay, you see the losses on the left side, right? As of today, you'd be down 566. Then you're going to be down, look there, and then down here. Now, what's those losses there? 117, you'd be down on today. If we went down that amount, we'd be down $2,800. And that is at 28.61. No, let's see what price is that. 57.51. Yeah, so that's down 20%. So 20% down move is right there, right? Yeah, so here's 5, 12, 20%. We're down $2,800 on the day. All right, let's move that down. We said a 10% down move, and the Qs would be 30% over here. So let's see how bad we'd be down there with this hedge in place. Okay, aha, look at there, y'all see what happens? See that those are where the puts start bumping in, right? Is down at that point. So maybe, you know, you look at this and say, well, maybe that's not far enough down, or you may want to put your puts a little closer. So you start getting that magnitude. See that? Start getting that magnitude there, that popping up. So here, if it just hit the 30% down, you're down $3,500 in a day. But look what happens down here. Look what happens when that starts going up. Then you start going up with those puts that are out there. So, you know, I would probably say, where do you want to hedge? Where, you know, you want to hedge on a 20% down move in the TQQs, which would be about a 7% move down in the Qs, because it's triple leverage, right, on the downside here with the TQQs. And then you could say, well, let's compare that to not doing that at all. So what if we didn't do that? What if we didn't do the puts? Where would we be down? So take the puts off. Boom. So in a 20% move down, you're down $8,200, $8,300 in a day. Isn't that great? So by buying those 10 puts, your risk is now, you're down $3,500. I got a feeling y'all's mind's probably like mine right now. You're swimming. It's just swimming about the possibilities that you could do. But that's what you do. And so would you have this hedge in place at all times? No. It's just if you kind of are reading the tea leaves and you have a thought that, hey, I think things are going to be rough over the next 30 days or so, then okay, use your shares that you're long to sell a call, right? That gives you a little bit of downside protection. And then you can use those calls to buy puts. Now, does anybody know what that's called? When you have stock, then you sell calls and buy puts against your shares. Who knows what that's called? Matt Jollywally, if you're not out building a snowman, do you know what that's called?
Is it a collar?
Yeah, it's a collar, right? And some people would call it a protective collar. So you're actually doing a collar on your shares. Now, you don't have to do a full collar. A full collar would be you own 400 shares, so you're going to sell 4 calls and you're going to buy 4 puts. And the traditional collar would be having everything in the same expiration. But I think y'all see what I'm saying is, hey, let's do the same thing that we're doing on the 111. Let's collect cash into our account. Let's collect premiums by selling calls. Okay, what are you going to do with the premium you collect? Well, we want to keep it. Well, yeah, but why don't you use that first week of calls premium that you get to buy $1,000? If I sold them for $1,000, well, use the money somewhere else. Buy the $1,000 worth of puts, and then buy those puts at a longer expiration than your calls, so that you get 4 weeks of protection. Then, after your calls expire after 7 days, sell another one. Now, how much of that premium do you have to use to buy puts? 0, because you've bought puts at a longer dated option, at a longer dated expiration than your calls initially. So we still got those protected puts in place. Isn't that cool? Now, I don't want to, have y'all flipping out and all confused, because we've never really done anything like this. I'm just saying, when you're looking and you have a concern, and what is the concern? We've seen pretty much an overall little correction in the NASDAQ lately. NASDAQ's been kind of weak over the last month or so. Do you think that's going to continue? Well, if you do, there are things that you can do. That's what I want you to know. I want you to know, if you ever get concerned, oh, I can't believe I'm in these TQs, man, we're taking a beating. Okay, well, what's your market opinion? Do you think that beating is going to continue? If so, sell calls, buy puts, protect yourself. Now, what's the great element of this is while you're doing all this, is you still got your algorithm running in the background. That's going to have us buying the weakness and selling the pops. So you're still going to be accumulating assets. We're still going to be accumulating additional shares. Why? Because over the long term, you and I are bullish. So, I mean, it's just really, really, really cool. So, you've used your $1,000 to buy puts. Okay. So the next time that we sell calls, which will be on Friday, if we wanted to continue going, then we're going to keep all that premium. We're going to keep every darn bit of it because we've already got our protected puts where we want to do our protected puts. And for the next week, guess what? We're going to keep that too. And the next week, we're going to keep that too. Then we're going to sell another $1,000 worth of calls. And what are you going to do? We'll buy another $1,000 worth of puts. Isn't that great? I mean, that you can do stuff like that. I just think it's great. And I'm worried about talking to y'all about this because I don't want anybody to be flipped out. I don't want you to go, oh my gosh, this is so complicated. I just want you to wake up and go, wow, it's just amazing at the stuff that I could do if I have a market opinion. So why don't we start looking at things and going, okay, where would I sell a call? And why would I do this? Well, I would do it because the relative strength has been really strong, and I think this is overdone. And we're kind of at the top of the channel, and we see what happens at the top of the channel. Now, everybody's saying, well, Bobby, what if it keeps going up? Well, it keeps going up. I'm just saying we're playing pot odds here. You're at the top of the channel. You're overdone with your relative strength. Heck, Bobby bought some goofy indicator that even says, the stochastics are agreeing with you. So sell a call. Buy your puts.
Right. Bobby, do you think the hedge funds pretty much set their algorithms to look at the linear regression and just, okay, we're at the top, sell? Because that's how it looks.
Yeah, that's exactly how it looks, isn't it? It looks like, that's why I love the linear regression channel. And it's not anything new, man. It's not anything new, and it's not something that has to hold. I'm sure I could pull up lots of charts where it don't, but how many times do you see me? And of course, the linear regression channel adjusts to these things. So, we shouldn't be looking at this as confirmation. So the linear regression channel might have looked like this on the day when that was done, right? It might look like that. So, right now it looks like, well, that was easy pickings right there. God, it was so clear. Why didn't you do that? But that's why I'm saying this. Why don't we do it? Why don't we sell a call when you're in the upper quadrant? So that means we're in this blue area. Right? You're in the upper of linear regression. And we see this thing, stocks go up, stocks go down, stocks go up, stocks go down. That's the way it happens. Cycles. Stocks just don't go normally, just straight up. It's in cycles. So let's do a couple of things. Let's look where you are in the linear regression channel. Let's see what the relative strength is. And if you want to add a stochastics crossover, which is this is all, let's admit, I can give you 100 lines of code. I can tell you what this is. This is a stochastics crossover. But its cool thing is he's got it where it'll give you a red bar. So you don't have to actually look at it. So you've got these three things lining up. I like my chances of selling a call there. So here's where I should have sold my call, use my $1,000 that I got on selling my calls to buy $1,000 worth of puts. That would have worked great. Will it work great the next time? You're not guaranteed that, but we're kind of lining things up to where they would. So Bobby Doodle was stupid to sell calls here. Why? We're in the lower, we're not at a relative strength, saying that that's overdone, right? The move's overdone. So it was a goofy move on my part. Now watch it work out. Watch it work out this way. Watch the market go down. But because that was just kind of my hunch that the market would go down. So who knows what the hedge funds out there are doing. But I think that you and I can use logic. Let's just use logic to make these decisions. And isn't it great? To go, wow, what a great time to sell your calls, buy your puts. And then, we're going to buy those puts. So it gives us 30 days of protection. Well, then you could sell calls again right here, right? Because that's 7 days later, 1, 2, 3, 4, 5, 6, 7. Well, that would have worked out again too. And you've got the protection down here. Okay, well, then you did it again after 1, 2, 3, 4, 5, 6, 7. Well, that didn't work out. That one lost. Then you're selling 7 again. Pop, 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 pop. It works out again. So what? 3 out of 4 would have worked out? I don't know. Yeah, inform your market opinions and trade accordingly. That's all we can do. But we would like to make this to where it's no art, right? No art, and it's all science. Science over art. So what I did on Friday by selling those calls was nothing but art. I said Bobby the artist is greater than Bobby the scientist. And I sold where I probably shouldn't have sold. This didn't show sold. This doesn't show sale. Nothing showed sale. It was just old Bobby thinking, oh, it'll probably be down next week. Even if we looked at the big green monster, it doesn't say it's going to be down next week. It says it's fairly priced. So, I went against the grain, but I told you I'm the worst trader on the planet. But I'm just showing y'all that there's all kind of stuff that you and I could do if we want to do it. All kind of stuff that we can do. Okay, Stacy. Yeah, have a great day. All right. So good session, y'all. And we're just talking out loud. I don't want anyone to put too much into this session. I want your takeaway should be this. Oh my gosh, I can do anything. You got all kind of options. Now let's figure out a way to scientifically make those decisions. Take out the art. Bobby, you sold a darn covered call at a wrong time, man. That was not good. You were a Dorcas head. That may work out, but the science didn't tell me to do it. So let's wait until science says, hey, yeah, well, you can absolutely have a good chance of making some income on this thing by making these type decisions. And here, sell the call, buy the puts. Great decision. All right, guys, enjoy the rest of your day. I'll see y'all tomorrow.